Hello everyone, welcome back to another Lumley trading live stream. Today we have had a lot of earnings kick off. There were kind of four main names I was paying attention to, but again we have had a lot of names. So pre-market we had VERIZON, General Motors, 3M, General Electric, Spotify. They're going to be kind of the key names out there. You also have Alaska Airlines, which could be a bit of a mover. Now we will run through the key earnings releases. So Spotify earnings per share came in at minus $1.55, so missing their estimates of 0.65, so 65 minus 65 cents. So quite a big miss on the EPS, and again that's why we're probably gapping down about 8% on the day, because what we've been seeing this earnings season is we are selling off, but we're still being bought up, or we're still selling off with strong earnings per share. So big difference to see on Spotify that the earnings per share was so weak. What's up, Sarah Gibson? About to load up on BBIG. Let me quickly just grab the chart up so I can see how it's moving today. Down 10% today. Okay, cool. So yeah, Spotify, the earnings per shares missed. Their revenue though did come in at 3.18 billion, so that did surpass their expectations of 3.12 billion. One other thing to note with Spotify though, that they have seen a 27% year-on-year increase in total monthly active users. So now they're reaching 551 million active monthly users. They just added a ton of options on BBIG. We'll check that in a sec. We're just going to run through the key earnings from today, and then we can have a look at the BBIG earnings and options and all that. Then also on General Electric, so they reported earnings per share of 68 cents. That did beat expectations of 46 cents. Their revenue came in at $15.9 billion, beating their expectations of just flat on 15 billion. So General Electrics look good. They're going on to General Motors. Their earnings per share did come in at $1.91, again beating expectations of $1.83. Revenues came in at 44.7 billion, which did as well beat the expectations of 42.4 billion. Verizon, their earnings per share came in at $1.21, again beating expectations of $1.17. However, that revenue did slightly miss. It came in at 32.6 billion, which did miss their expectations of 33.3 billion. So again, I would say they're the four kind of key earnings. You have General Electric and General Motors kind of beat across the line in both revenue and earnings per share. Spotify missed the earnings per share. They did surpass slightly on the revenue, and on Verizon again beat on the earnings per share, but had lower revenue than expected. Now there's three kind of key news things I also wanted just to cover, and then we can run through some other things. But firstly, you have the Amazon and iRobot merger update. Again, this is Amazon, so ticker AMZN, and iRobot, which is a ticker IRBT. So Amazon and iRobot have reached an agreement to amend their merger terms, and this is revised share prices. So they were looking to buy them at $61 per share. So obviously Amazon buying iRobot for $61 per share, but now this has been reduced to $51.75. So we can quickly throw this up just to see how IRBT is moving today, and as well that's why we're then gapping down just under 10% on the day, and Amazon should be up on this news. Yeah, up 0.3%. Again, Amazon's never going to move as big on something like this because the news isn't as significant to them, but to iRobot, obviously, if it's a buyout of their company, reducing it by, what's that, about 15%, 20%, the buy price, obviously going to have a big impact on how that stock trades today. Other key news is in Palantir. So Palantir is having a collaboration or joining forces with JD Power. And the reason this is going to gain most likely kind of some interest is the reason they're partnering is to develop generative artificial intelligence. Again, whenever you see AI in the name right now, that's a hype word, and you're always going to see the stocks usually fly off this. So if we quickly pull up Palantir, again, that's why you're strong on the open. most likely. On that. And then one last thing I did want to cover is the TikTok's new venture. So not only are they now doing the video, or obviously the video platform, but they are looking at launching their own e-commerce business in the US, that is going to offer made in China goods to consumers. So we'll see how that is. Could definitely be a strong move, especially thinking more at it from like a drop shipping perspective, where people go on, advertise for basically free, wait for that video to blow up, and that can bring in some sales. So maybe they're looking to capitalize that basically from themselves. So that was quite key, and they're the key headlines I was paying attention to. Now we can go and then check out the BBIG that Sarah was talking about. So if we pull that up, still down 10% on the day. It said a lot of new options launched. I don't really know what we had before, so I don't know what's new and what's not, to be honest. So yeah, I'm not too sure what's changed on the options. Again, I don't really look at these kind of stocks all that much, but yeah, I mean, we did cover this, I think it was yesterday, because it was flying, again, was becoming a bit more overbought, so could have definitely looked at it a bit more short bias. Again, this is what we were looking at yesterday, 517. As soon as we came into there, we were overbought, could start looking at it short bias, and that's why very quickly you can see we kind of returned back below that level. But if we did push back up, looking short bias from 670, 1015, 1335, and a final level at 1514. So again, these would be the key levels. I'd be short bias really at any of these. Now we've done the 517, I wouldn't really look to retrade that, so I would wait for a further move to the upside and then again look at it short bias. The shares are hard to borrow, so if there are more options, going to make it even more accessible. But again, we would just be looking to play the options if I was looking to trade that to the downside. So that's quite key. Let me put that there. So let me know then if you guys are looking at anything key that you maybe want us to cover. Because right now the main things I'm watching at is really just kind of these earning releases, seeing how they are moving. Quick check on Spotify, kind of consolidating at its opening value, but again, probably expecting to see that move continue to the downside. So again, we'll see how that reacts throughout the day, but yeah, wouldn't be unlikely to see that continue to push to the downside, break those lows, because again, what you're seeing with a lot of these stocks, not so much on Spotify, but still slightly there, is where these stocks are when they're coming out to the release. So Spotify was a bit overbought, not extremely, and that's why I'm surprised we're seeing such a big reaction off this, because again, we were relatively near fair value. Fair value was at around $150 to around $170. And we were relatively near that as that release came out, and obviously we've sold off. So right now we do have a support at 141.30. So if we do continue down, that's the support I would be looking at for today. But again, that would still require a few points sell off from where we are now. Then to quickly cover the other earnings names, just to quickly see how we're reacting. So again, GM had good numbers on both earnings per share and revenue. Why are we selling off of this release? Because we look where we were before the release. We were in overbought territory. We were above that first deviation on both the 6 month and the 1 year. That is considered overbought, and that's why even if the numbers do come out relatively in line, they've priced in a good move. Again, we've been talking about this all of last week, yesterday as well on the earnings. We're seeing this time and time again right now. You're having this run up pre-earnings, so unless they absolutely destroy earnings, you're most likely going to sell off or basically stay flat. So on a lot of these, I am liking the bearish play, because again, if the earnings come out bad, those options will absolutely print. If it comes out relatively in line or beats, again, they probably won't move all that much. Yes, you'll lose some on the implied volatility, but that's about it. So I'm liking the look of that. We also had General Electric. That one, again, why did we actually, they had relatively similar numbers to GM, beat earnings per share, beat revenue. Why were them trending up on GE? Because again, look where we were. We were actually below the fair value area. We didn't have the pre-earnings run up, or nowhere near as significant as you were in the other stocks. So as they came out, we were reacting to the actual earnings, not, had the earnings priced in and then a kind of a reaction after that. So that's why GE is moving like that. I think we did cover Spotify. Yeah, we did. And then the other big name we had was 3M reporting today. Again, they are trending up. They were actually a bit more on the overbought side. But again, not really even at their first deviation yet. So not normally something we even pay attention to because we don't really consider that overbought unless they're kind of holding above that first deviation. But just to point down the key levels then on 3M, we have 109.25. If we did pull back to kind of the pre-earnings level, we have the 104.42, which is our 6-month first deviation. And if we did end up breaking this, we'll just plot this out so we have it on the chart. That would be a 114.85 as that next key resistance. So those are the key levels I'm paying attention to over on 3M.
And then you to your 4887. You're from the Fed tomorrow, right? Tomorrow.
No, we're only talking about earnings.
Sorry. We'll be right back.
From what I could see, BBIG didn't see like there's any big news. Let me just quickly pull it up. I don't think there was anything dropping. No news today. Again, the main reason we're going to be selling off, not off any news, but down 8%. We're probably going to most likely continue this sell-off from an intraday perspective. Again, we're retesting the anchored VWAP. We're selling off of this level. But what's always key to be paying attention to is where you are from a basically overall standpoint. And again, we covered this in yesterday's stream when we talked about BBIG. We even did a video on it and why we're selling off. Because again, don't forget this stock was at $1.12 going back, a month and a bit. Now you're sitting at $5 yesterday. So as you get these squeezes in the stocks, we do see this quite often on these small cap stocks where they squeeze. But as soon as they come into then key levels where either institutions are starting to short it or just traders, investors are looking to take profits, and that's into these key deviation levels. So you can see as we came up, we came into this $5.17 level, which is our first deviation on the 6-month. This is when the stock starts to become a bit more overbought. So if anyone's holding it long, usually from an institutional standpoint, they will start to take profits coming into these areas. So again, that's why you're probably seeing that sell-off as you come into here. We could, if we did push high, we would have 670 as another key level. And then really very rare that you would see the stock push above its kind of second deviational level. So from 10-15, we don't really expect it to go up. Even if you get a relatively good catalyst, it will probably be a short-lived move. If we did break above here, you might see it trend up, and then, all of a sudden you'll kind of crash back down to a relatively fair value area. So that's what I'm looking at on BBIG. Again, not really key news. It's just selling off because you're coming into a key sell-off area. And again, quite extended. A stock going up, 500% in a month and a half. You never really see stocks actually hold those kind of moves. Usually a bit more of a hype move. So that's more what I can see when looking at that. I think we've covered all the key news as well today. Again, the S&P is basically flat on the day. Is bouncing, especially in the futures. It was a lot clearer, came down to its anchored VWAP. Seems like we're holding that onto the open, pushing up. So we'll see if we can test yesterday's high and how we can start to react coming into there. AMC down at basically 10%, or is at 8.5% today. Then if we're looking for a level on that, probably looking to retest that anchored VWAP, and that could be our entry to trade that short bias. 3M again gapping up off its earnings. If it pulls back, then we could be long bias again off that anchored VWAP at around 105.77. Palantir not had its earnings again. They've just announced that partnership with JD Power. Anchor VWAP could always be a relatively good entry though. We'll then go on Spotify. Again, with Spotify, we do expect this to continue down. We did, say probably more than 10%, which we've now just hit. So that's not unlikely. BBIG, again, quite bearish on the day. Came into an overbought area. Today, we've retested our anchored VWAP. Selling off, probably will continue lower. So that's the main things, I guess, I'm watching.
Eli Lilly drug, you're going to have to prove that you may have possibility of Alzheimer's. So what you need is two things. You want to find out if your relatives have it, and you need an MRI brain scan to see whether you have plaque buildup. Well, the company that leads in that is GE Healthcare. And you see that stock up well, and they're going to be on tonight, and we're going to talk about it. because frankly, you're not going to be able to get that incredibly expensive drug unless you have plaque buildup.
And the way to find the plaque buildup is through the machines that they make.
Tonight.
I love it.
Yeah.
By the way, Biogen, speaking
the numbers
of,
good,
not bad numbers, right? Biogen?
No.
Yeah.
But Dave, I know you want me to stay with her. GE Healthcare was good. Can I sneak in NVIDIA for 10 seconds? Taiwan Semi's talking about they need more capacity for NVIDIA. All right, there, I'm done.
Yeah, you did it.
Okay, good.
All right, after the break, we will have an exclusive with GM CEO Mary Barra. That stock is actually down. We'll get a read on those earnings. We're back in 2.
As well, just to note as well, obviously the bonds are a bit stronger coming into the open, as long as the euro, which means the dollar is also weak coming into the open. Key figures today, the only thing we really have significant from the US data side is going to be the CV consumer confidence. This comes out at 10 a.m, so in about 15 minutes from now. This is normally a fade trade. Again, we will probably trade it. We trade it normally on the futures, so we'll be looking at that. But yeah, if it comes out, normally looking to trade it for a fade. So if it moves up on the release, we short it. If it moves down on the release, we buy it. Normally how I look to do it. And then quite late tonight, so 9:30 p.m. market time, so Eastern Standard Time, you do actually have the Australian CPIs coming out. So again, if you're on the FX side, it might be a potential trade. As well, getting into tomorrow is going to be a key day. We've got the FOMC coming out tomorrow. We have the federal funds rate. So we obviously previous was, and how we're sitting right now, we're sitting at 5.25% as a federal fund rate. Tomorrow we're forecasted to go up 25 basis points up to 5.50 or 5.5%. So again, we will be seeing that tomorrow. We will most likely be coming out as forecasted. Very rare that you ever see the US kind of divert from what's priced in. So that's most likely what we'll be seeing. And again, this could potentially be the last rate hike. There's still a bit of a speculation whether there'll be one more after. I think the likelihood is we probably will see one more. I don't think they'll want to hit that 6%. So I could see we get the 25 basis points tomorrow. And then 6 weeks down the line, we get another 25 basis points. And then maybe then can we start to see it kind of stay flat for a bit. And then in time, coming into 2024, start reducing those rates. So that's going to be the key thing tomorrow. And then obviously 30 minutes after, obviously that's always released at 2 p.m. market time, 2:30 market time. You then do have the FOMC press conference where Jerome Powell will be speaking. Just checking out for the rest of the week, doesn't seem like we have any crazy news coming out. We just have the advanced GDP unemployment claims. You also have the Eurozone main refinancing rates, which could be quite key. But I think, yeah, the main focus this week is obviously on the earnings if we're paying attention to those individual stocks, and then tomorrow with the federal funds rate and the FOMC statements. So that should be quite key. And again, if there's anything in the press conference about that being the last hike, that will be a massive move. But again, I think that would be quite rare. A lot more likely to say that they're unsure, but another hike is likely or is possible.
Raising its full-year guidance, reporting second quarter results that rose on a year-over-year basis. Phil LeBeau joins us now. He's going to dig into the numbers with Mary Barra. Phil.
Thank you, David. Let's bring in Mary Barra from the GM headquarters. Mary, you heard David there. He set it up well. You had monster numbers for the second quarter. You're raising your guidance for the full year. But the stock is selling off right now, and I think in part because people are wondering about the additional cost cuts that you guys are putting in place, as well as pullback on capital expenditures, and the question of whether or not you're hitting perhaps a bit of a rough patch over the next year or so as you may be slow to ramp up EVs. What do you say to that narrative that seems to be circulating a little bit out there?
Well, you know, if you look at our EV ramp up, we said we were going to produce 50,000 in the first half of this year, 100,000 in the second, and then cumulatively to 400,000 by middle of next year. We are still on track to do that. And the reception we're seeing from the products, especially now with
BBIG looks like it's coming to retest the lows. Again, AMC breaking those lows, coming in. If we drop another 25 cents, that'll be yesterday's low. Don't forget about that. 3M's breaking the highs or trying to attempt to break those highs. Spotify staying close to VWAP, but still selling off near 10% on the day.
across all areas of the business, and how do we really make the capital that we are investing do more. But we still intend to cover 90% of segments in especially EVs. We pretty much do that already today in ICE by 2030. So we're on track to our plan. We're just going to keep executing and keep making sure we earn customers because we've got the right products.
Mary, you guys announced that you're going to be putting in manual battery module assembly stations at a number of your facilities because of a problem with one of your suppliers when it comes to the Ultium battery platform. How much will that slow down the ramp? I know you're targeting 100,000 EVs produced in the second half of this year, which has been your target, but that has to be a headwind.
Well, clearly, we're disappointed that the module assembly, the actual assembly line for that has not been on time, and that is causing us issues. We're doing both automated lines and manual lines, and the manual lines are something that we'll be using in many places, especially as we bring more and more plants up with EV capacity. But we're also bringing automated lines in as well, and frankly, high-speed automated lines. So we're doing both to not only deal with the situation we're in now, but to make sure we stay ahead of module production as we have a ramp on our way to 1 million EVs in North America by 2025.
Mary, good morning. Jim Cramer. Good to see you as always.
Good to see you.
There is a UAW president. His name is Sean Fain. And Sean Fain is using language that I have not heard in 30 years. I think that the recommendation that he has from what he feels his rank and file one is for really kind of a retaliation against multiple years of the UAW working closely with you to be able to make it so everybody wins. What are you going to do? Is the rhetoric just rhetoric, or is there going to be a strike, Mary?
Well, we're doing everything possible, Jim, to make sure we're getting to the table, which discussions have already started with the UAW, that we get to the real issues. And, we want to do the right thing for our employees. If you think about our manufacturing employees specifically, what they've done over the last several years of getting back to our assembly plants quickly, following safety protocols as we move through COVID, and frankly, the strong demand we're seeing for our products. So, they're responding to that as well. We think we can find an agreement that does the right thing for our employees, but also...
Just a note on this ELBM, which is one of the leading gaps today, up 86%. So we did come into this key resistance. This is our third deviation on the 6 month and second deviation on the 1 year. If we start to retest this and break it, obviously we've been setting off from it right now. If we do end up retesting this, there is really no resistance. We could see a strong breakout, and if we do, 338 is going to be that next short bias key level. 3M's just broken target as well, up at $10.10. So some strong moves. Let me actually quickly check if it's coming into some sort of a key level. Or any sort of new key level. So yeah, we've broken this 109 at 25, pull back. Again, if you get that retest, you're likely to break, which we're doing now. If we do continue up, then again, we got that target at 114.85. So paying attention to that, really.
Have the facts. But again, I think we can get to an agreement without a strike, and that's what we're going to work hard to do.
Mary, it's Phil again. On your EV cadence of new models, you've got the Silverado going into production this year, the Chevy Blazer, the Equinox, especially on the lower end of the market. Now you're bringing back the Bolt, which you just announced today. Do you believe that lower end of the market, and I'm talking about sub 40,000 as far as an EV, is that the growth target or the growth area in terms of EV adoption in this country?
Absolutely. And when you put that in hand with charging, because what we need to do is win consumers that only own one vehicle and that are price sensitive. And so by having not only the Equinox, the Chevrolet Equinox EV in that space, as well as the Chevrolet Bolt that is just really strong from a consumer perspective, that gives us the ability to offer some choice in that space at two different price points, but both on the lower end. And then with everything we've done from a charging perspective, allows customers to choose an EV because they can have it as their vehicle for everything, especially with a robust charging network.
Mary, you've been to China in the last couple of months. I know you guys have a huge business there. And yet everybody is looking at the incredibly competitive market when it comes to electric vehicles there, the price cutting that is going on there. Do you see that ending anytime soon, or do you think this is a case where we're going to see the Chinese automakers continue to be extremely aggressive when it comes to cutting prices?
Well, we need to compete in that market. We have very strong low-cost products coming out of our joint venture with Wuling. From a affordability perspective, as we get to some of the higher ends, especially
Again, we got about 5 minutes into the CB consumer confidence.
right price points, but also the right vehicles to compete. And my expectation is it's going to remain a very competitive market. When you look at the fact that there's over 100 new Chinese domestic EV automakers, there's only 50% capacity utilization right now. I think at some point it's got to sort. But in the meantime, we expect and we're going to be in that market and look to compete and win based on our products and the fact that we can be efficient.
Mary, here in the U.S., interest rates for auto loans remain very high relative to where they were a year ago. And yet, look, your average transaction price is $52,000 for the second quarter, essentially, for your new vehicles, and demand remains strong. Are you a little bit surprised at the resiliency of the consumer here in the U.S.?
Definitely seeing strength on this ELBM. So again, hit those resistances of 256, 261, which is quite key. We sell off quite hard. We came down to 230. That came down to our anchored VWAP. That's a 2-day anchored VWAP. Seems like we hit that basically to the penny, bounced off it, and now potentially strength to the upside. If we break the highs today, again, we don't really have any resistances in sign. We're going to have that $3 psychological resistance, but then really if we break that, we got the pre-market higher day 304, basically at the same key psychological level. But past there, we then have the 338, where I'd be very short bias from. No option zone, not available to borrow, so going to be a hard one to actually trade.
Into the Automotive Hall of Fame, I believe within the next couple of months here. You've been running General Motors for now almost 10 years. You certainly still have the energy and the desire. I know that from talking with you, but how much longer do you expect to be in charge of General Motors before you say, you know what, it's time to transition to new leadership?
Well, the board makes that decision.
3M retesting that 109.25 support.
Moments in this industry in a very, very long time. When I look at the product portfolio that I've been working with the team on for several years now is just coming into the marketplace, not to mention Cruise, which I would have thought with the strong points that Kyle made during our earnings call of the growth we're seeing, the fact that the vehicles are safely, we're there, we're now. I mean, they are an AI ML company. I think we just have incredible opportunities. So I don't plan to go anywhere. I'm very much looking forward to all of this technology unfolding and people understanding the true value of General Motors.
And we look forward to talking to you in the future many more times. Mary Barra, General Motors CEO, joining us from the company's headquarters. Mary, thank you very much. David, I'll send it back to you on a day where, look, the numbers for the second quarter for GM, unbelievable. I mean, the demand is there for their internal combustion engine vehicles. But the market right now is, it's pushing shares lower on the concerns about cost cuts and the EV ramp up.
Yeah. And
Still got a few more minutes to the release, but we're seeing a big breakout on SPY, the ES. ES hit to the penny yesterday's high. Starting to sell off a bit off there again. Normally just orders will be sitting there. We retest, most likely a break.
Raytheon, Jim.
Phil's got the beat on this.
Phil's got the beat. The airlines are down as well. And Greg Hayes is now going to join us. So we're happy to hear that Greg will be joining us momentarily to discuss this Pratt & Whitney engine issue that is going to bring a lot of assessments of these engines and enhanced inspections.
How about the airline?
Yeah, and for the airlines as well, all of which are down, by the way, stock price-wise. All right, Jim's going to hang around for that. We're back right after this.
Looking into it then, actually I didn't even check the airlines today. Yeah, you have Delta down 3% on the day, down at $46. Retesting or looking to come and retest its VWAP. I don't actually know what the ticker is for Alaskan Airlines. Let me quickly check. It is ALR. Have a quick look at this and then we've got a minute until the release, so we'll get into that as well. It's ALR, isn't it? Doesn't seem like that's working. Oh, okay. That makes more sense anyway. It's Alaska. Oh yeah, so Alaska Airlines down 10% on the day. So quite a strong move on there. From a deviation perspective, does that make sense? Was in a bit of the overbought territory, so again, the sell-off making sense. It did come back down though to fair value. So I wouldn't be looking to open any positions on it as of right now. Again, we'll pull up the ES futures. That's normally how I look to trade this CB consumer confidence. We have 15 seconds to that release. Normally a fade as well. Normally a fade. Again, we will have Squawk reading it out.
Higher than the forecast of 112.
Again, I don't know if that caught it. It was 117 compared to the forecast of 112. But again, we basically had that fade, quite a small move. Again, it fell down about 2 ticks and faded. Didn't even enter on that. Didn't really provide a significant enough move. When trading that, I do want to see, you know, kind of like probably 6 ticks plus.
So seeing consumer confidence prior revised coming in at 110.1.
Okay.
And the Richmond Fed Manufacturing Index prior revised coming in at -8.
So again, just to cover, USCB consumer confidence actual came in at 117 versus the estimate of 111.8, and again the US Richmond Manufacturing Index came in at -9 compared to the estimates of -10.
Now, rated R.
Welcome back to Squawk on the Street. Rick Santelli here, live at CME HQ with the breaking news of this Tuesday morning, first day of a 2-day Fed meeting. Consumer confidence for the month of July expected up to be around 112. Our last look, by the way, was the best since Jan of 22. It is improving to 117, 117. So in order to be a higher number than 117, I have to go all the way back to July of 21. Let's call that 2 years. Solid number. Present situation, 160 in the rearview mirror, 155.3, 160. Have to go all the way back 3 years to March of 2020 to find a higher number. And what lies ahead in the form of expectations? 88.3, 88.3. That's the best level since Jan of 22. These are really robust numbers. Now let's look at Richmond Fed for the month of July and realize that we've had 6 consecutive negative
The US one-year
month-over-month
consumer
numbers.
inflation rate
Well, now we have
expectations
7.
5.7%
close
in
to
July.
Expectations. The worst negative number that we've had in this series was -16, and that was in February of 23 of this year. Now, if we look at the service side of the equation, Richmond Fed business.
So reading into the CB Consumer Confidence Report, consumer confidence declined in January, but it remains above the level seen last July, lowest in 2022. And consumer confidence fell the most for households earning less than $15,000 and for households aged under 35.
17 now in a row. Why is that important? The service side is what the Fed's watching most closely. So I don't really want Richmond Fed to have negative service side, but it certainly does go a long way if the rest of the country moved a bit more in that direction. Sarah, back to you.
All right, Rick, thank you. Rick Santelli. And good Tuesday morning, everyone. Welcome to another hour of Squawk on the Street. I'm Sarah Eisen with David Faber and Jim Cramer with us ahead of a special guest in just a moment.
What's up, man? Sorry, I didn't see the message right away. What are you looking at to trade today anyway?
Although it's a small one today, it's being driven by technology, communication services, healthcare, and discretionary. Those are the positive sectors.
Yields slightly extend gains after consumer confidence report. 10-year yield up 5.5.
Industrials and financials are lagging today.
5 basis points.
We've got a lot to talk about when it comes to earnings. And you know, David, I always like to pull out, and Jim, the macro takeaways from the earnings, what we're learning about the overall environment, especially from the industrials, which are so important and have been sold off lately. So we're going to talk to Raytheon in just a moment. Here's the quote that I pulled out just in the overall environment from the CEO, Greg Hayes, on the call. Global commercial air traffic remains on track with our projections for very robust summer travel season driven by incredibly strong consumer demand. This dynamic is supporting strength in the aftermarket and growth across the globe, with revenue passenger kilometers now tracking at about 95% of 2019 levels. So I know there's some other issues to talk about there with Raytheon, but I thought it was a pretty strong statement, at least on the consumer, although we know the consumer's prioritizing travel. We know that's where the action is.
Right. What we're going to talk to Mr. Hayes about momentarily, of course, is this issue with Pratt & Whitney that's going to result in taking a lot of engines out of service for some period of time. Jim, contrast that and back to industrials with GE,
right,
which, of course, had a very strong quarter. Stock is off of its highs, but still up nicely this morning, and in part powered not just by aviation, but by wind.
Right. Wind, it looks like it's better than expected. Onshore, not offshore. Offshore is more Europe. But one thing that's funny is that if you look at the GE building, what does it really stare at? It stares at the Gillette sign. And the reason that I like this allegory is that GE makes all its money on the maintenance and repair of engines, 70%. And it's going to be extraordinary. Why? Because planes are being used and used and used. Flip side.
Also seeing British information indicates Russia has laid additional sea mines in the approach to Ukrainian ports.
Also biggest drag right now on the Dow. You know, we did get some other signals on the consumer, which, you know, I'm always looking at. Unilever, they raised guidance. Kimberly-Clark raised guidance. I know these are staples, which tend to do well in good times and bad, but the commentary is pretty good. Here's Unilever from the call, just a quote on the U.S. market, which we pay close attention to. It continues to grow whilst very British inflation eases. However, sentiment is dropping and consumers are starting to show signs of caution. Private label growth has picked up across the market, but particularly in ice cream and in dressings. In this context, Unilever delivered 6.7% growth in the quarter, balanced between price and volume growth. My takeaway from Unilever is lower inflation, moderating inflation, except for ice cream, and more cautious consumer.
Right now, they're claiming they're going to get a lot of price and they don't have a lot of inflation. That's true, and it's out to 7%, which is terrific. I point out that Walmart today, in a big upgrade by Piper, is saying point blank the trade down is real. The Great Values brand is doing incredibly well. So we are at the crux of what I think is going to be a battle royal for.
Seeing with the AMC, it's come back into its deviational level and kind of moving in between that and the VWAP. If it's able to break this 538, could definitely see some upside move to around 560, and then I'd probably be flipping short bias once again. Also seeing 3M move back above its 109.25 deviational level, showing a bit of strength. And again, Spotify basically staying near those lows, really targeting that 140, 130, and then from there I can look a bit more long bias on it.
With Raytheon, but I do think that the crux of what's going on right now is Unilever bucked the trade down because they've got good brands, but the trade down's here. It's definitely here. And the price differential between Walmart and another company you cover so well, Kroger, is rather dramatic.
You got to it. We didn't get to it in our hour, but you managed to hit it here. Because I wouldn't let him talk about Unilever. I don't know why.
Because it happens overnight. He doesn't care about overnight. Like Taiwan Sam, he doesn't care overnight.
One thing we did talk about a lot in the last hour, of course, is the significant slump in shares of Raytheon. They're at a 9-month low. The reason is not earnings. The reason is a disclosure of an issue with powder metal for its Pratt & Whitney engines. Let's bring Phil LeBeau back now, and he is...
G also looking quite nice off its anchored VWAP.
Bring in Greg. Let's not waste any more time. Greg, David set this up. What exactly is the issue in layman's terms with the geared turbofan engines that are in question and the powder contaminants that you guys are doing these inspections for?
So, Phil, maybe I really need to maybe put this in perspective. So back in 2020, 3 years ago, we had an incident on a V2500 engine, which is the engine that powers the A320 before the GTF. As a result, there was a turbine disc failure. We did an investigation, and we determined, based on that investigation, that the powdered metal that was used to form the discs had a contaminant in it. And as a result of that, we began a process of inspecting the V2500 fleet as well as the GTF fleet, really across all of our programs. We've inspected about 3,000 discs, these are turbine discs, over the last 3 years. We've found a very, very small fallout rate. But based upon what we have seen recently, there has been a concern that we need to inspect the fleet more rapidly. So again, we've inspected all the V2500s. We're going to have to pull in about 200 GTF engines. These are the GTF for the A320 fleet. Pull in about 200 in the next.
We've just added a poll to the chat as well. Let us know if you think the market's going to close green or red today. Right now we're up 0.10%. But I mean, at this point, anything can really happen. So throw your vote. We'll probably close it by about 11, so in about 50 minutes, and see what most people are thinking.
Powdered metal that we use to form the turbine discs. So it's a problem, obviously, for the airline operators, and it's going to cause some disruption for the airlines. But it is not going to be a major financial impact beyond the initial, I would say, impact that we're going to see as we work with the airlines to compensate them for some of the disruption, as well as to tool up to do all of these enhanced inspections.
Greg, two-part question here, and I want to be specific about the first part. This is not an immediate flight of safety issue, correct? This is an issue where you want to correct it as soon as possible, but it's not like the airlines have to shut these planes down right now, correct? And then the second part of this is, you mentioned that this is going to be expensive on the conference call. How expensive ultimately will this be for RTX?
Yeah, so let's go to the first issue, which is flight safety. Obviously, flight safety is our number one priority. It's the number one priority of every airline out there, of every OEM. This is not a flight safety issue today. This is a quality escape where we are, based upon our safety risk assessment, doing some proactive inspection to make sure that these anomalies that happened in the powder metal don't propagate in terms of actually ending up in a failure of the turbine disc. So we're going to pull these things in quickly. We're going to take a look. We expect, again, a very small fallout rate. And to the extent that there is a disc that needs to be replaced, we'll do that and get it back into service. In terms of the financial impact, Phil, I would tell you.
Right now, 100% of the votes have been green. So again, if you have an opposing view, why not throw a vote?
I was just going to talk about the financial impact. So we've estimated about a $500 million cash flow impact this year. And that is to do a number of things. One is we've got to...
Also, AMC really struggling on that 538 level. So if we do eventually break, could be quite a strong break. And again, we've got that 560 as that key target.
We're going to have to put some rotable assets in place to replace engines as we pull them. And we're going to have to try and work with the...
I think my main trade opportunity for the day is on Spotify. So take a spot. Pushing down on their earnings, 143.30. Might look for a bit of a bounce play. Could open it as a swing, but if it starts pushing quickly, then obviously we'll turn that into a day trade. What was that? Bro, question I have, if you don't mind, how do you create a watch list of stocks? What do you mean by that? Do you mean like, how do you actually create it? Like, how do you throw them in your watch list on Thinkorswim? Or you mean, how do I justify putting stocks into a watch list?
For some time, and that you've made a decision to accelerate. And I'm curious as to why, or what you saw that was behind that decision to accelerate.
Yeah, so we have been inspecting since we had the failure back in 2020. As I said, we've done about 3,000 inspections of turbine discs across the fleet, and we found this very small fallout rate. One of the things that we found very recently is that one of the contaminants that we had identified is actually the cracks are propagating faster than what our safety risk assessment said. And so as a result of that, as we take a look at the lifing model of these parts, we recognize that they're not going to have the life that we expected. And so as a result, again, flight safety number one, we're going to pull these discs back, we're going to pull the engines back, we're going to inspect the discs just to make absolutely sure we don't have a problem down the road.
Greg, how long does it take to do an inspection?
Spot breaking those lows.
I call it a one-shift inspection. The hard work is you're going to pull the engines off of the aircraft. You're going to have to ship them back to one of our overhaul centers. We're going to tear it down, and that process will take a couple of weeks. The actual inspection itself is probably a shift, maybe 8 hours.
How do you research a certain company / stock and see something you like and create a list of things you plan on watching throughout the week? So the way I do it is obviously during earnings seasons, it's pretty easy. All I'm looking at is really the companies that are reporting earnings that day. So obviously for today, all of these stocks are the ones I would have somewhat on watch. So I want to know what's happening with these ones, how they're moving. is there any, basically opportunity coming into them? Then not only that, that will be for the day trades most likely, or if there's a big move, that will be on the watch anyway. Then I look at what's happening after the close, because you have obviously Microsoft, Google, Snap, and these are probably going to be the four main I have on watch. What I then do is see, are they overbought, are they oversold? Because if they're extremely overbought, extremely oversold, I will be looking at that as a swing trade, and look to play the opposite direction. Because again, if let's say Microsoft is extremely overbought, I don't think it currently is, but if it was, if I short that again, or when I say short, I do mean usually paying options. So say longer put or short the shares by calls to define the risk, but I always have defined risk going into it. But then, I'll be seeing, where are these stocks on this list? Are they overbought? Are they oversold? If they're overbought, obviously I look to play against that direction, because if earnings come out in line or poor, it's going to drop. If they come out relatively strong, then it will probably won't even push up much, so I can limit those losses. So that's firstly how I'll do it, is normally looking at earnings if we have earnings. If not, then I normally just have scans. I'm not so much focused on creating a watch list at the beginning of the week and then trading off that. I'll normally have, and I can put this screen over here, what you normally will pay attention to is, again, firstly we have a gap scanner. So these are normally small caps, which I'm not as big of a fan of trading, because most of the time you won't have easy to borrow, or they won't have options. So I mean, I'll filter through these if they do have, if I can short it and or they have options, then obviously I can look into it, and those will be some trading opportunities, either from a day or swing trade perspective. And then I also got this frequent mover list, which are just stocks I always see, especially from YouTube and stuff, people always commenting about. They're very volatile stocks. So, you got the MCs, Meta Materials, APRNs with Blue Apron, Tilray, all these kind of companies that can move quite a lot of percentage. I'll pay attention to these again when they become overbought, oversold. I can start the reversal play, look at it from a swing perspective. And then the last way I find stocks is this watch list I have just called All. And all it is really S&P names, which tend to have quite volatile moves. So on here, again, I don't really throw in stocks like, say, Coca-Cola. Actually, it might even be in there, but I won't really trade them all that much. But stocks where, they're going to move 20 cents in a day, I don't really care for those. Not really going to provide much trading opportunity. But, on here, you got the Nvidias, you got the Snows, you got the Neo, Pfizer's, all these kind of stocks where they can be quite volatile. And so I throw them on here, and then I can see, okay, these ones are down, 2% today. That's an opportunity. On the other hand, this stock's up 3%. There's potential opportunity. So that's usually how I look into finding stocks and throwing them on a watch list, so to say, if that helps. And then last thing as well is just being in the Discord and stuff. People saying stocks they're looking at, I'll always throw it up on the chart, look at it from both a day trading, swing trading perspective, see if there's any opportunity. So that would be usually the main ways I'm looking at stocks.
Significant down day for RTX.
That's quite typical. As soon as I went to go back on the news, it just completely pauses for some reason. But yeah, I mean, that's the main breakdown on how I tend to look at stocks. Again, everyone has their own way. That's just how I've always found it to be quite an efficient way to be looking at stocks. Not seeing any sort of new news drops, just seeing what's happening with this, if we can fix the news anyway. And again, let me know, firstly, if you haven't already have a vote. We have 100% still currently voting. The market's going to close green. And again, if you're looking at any stocks, throw them in the comments, and we can throw them up on stream. And maybe just look through them, see if there's any trade plans and anything like that.
20. It's everybody's. It's a narrow body.
I mean, to your point, Raytheon raised guidance except for free cash flow, which they lowered on this issue. But because of demand, what's happening in the defense outlook and in the aviation?
Right. Otherwise, fundamentals for the business
were
very
strong.
good. Yeah.
Well,
But they accelerated this inspection.
Thank you very much, bro. I'm a new trader in terms of being fully committed to it full time, so I find a channel like yours, even though it's a bit ahead of my understanding at the moment, you make it understandable. Yeah, I try. I think that's always a thing as well. It's just, you kind of flick around, see a lot of different YouTubers, or it doesn't even have to be YouTubers, maybe interviews or anything from, I don't know, even though Wall Street traders or something. Usually it'll be a bit different kind of style though, if you're looking at a Wall Street trader compared to a retail trader, because you're going to be trading different strategies if you're trading your own money compared to other people's money. But yeah, definitely, if you're newer to it, just flick around. You'll start to see people explain it in ways you like, or maybe trade in a style you like. Because I find, a lot of the traders on YouTube actually tend to be trend traders, which to me, I really don't like. I don't trend trade really at all. So to me, it was always kind of hard starting off, because I had to find more traders who did reversals, because to me, I just like that opportunity. I like that thinking of it a lot more from a reversal standpoint. So I appreciate you a lot, because your videos help me find stocks to look at. Well, yeah, thank you for that. And yeah, I mean, that's an easy way to do it. You can see what people are talking about, whether that's YouTube, Discord, Twitter, whatever. And again, yeah, throw them up. It's normally one way I find a lot of my short opportunities, really, to what are YouTubers, what are TikTokers talking about. Or actually, you don't have TikTok, but maybe on Twitter or something. Because normally the ones there are all super long buys, the blue aprons, the, Mullen was a recent one. All these stocks there, super long buys, they're normally rubbish cash flows, rubbish balance sheets. They've been falling 90%. They're probably going to do a reverse stock split, fall another 90%. So again, on your trading plan, if you want to join them long bias, you can. To me, I like looking at those videos, because then to me, normally a great short bias opportunity. Because again, normally they're more just hype plays where if they go your way, you'll make a lot of money, but 9 times out of 10, they go against you, and the people holding it long lose everything. So they're normally the ones I look at and again play against them.
Look, this is a piece of good news, and it's always good when we have a piece of good news. We have this slight upward revision in our 23 forecast from 2.8% to 3%. So there's a little bit less of a slowdown from last year. And, we should celebrate that. But at the same time, we shouldn't celebrate too much, because, growth remains low by historical standards. And more importantly, what we're seeing is we are losing some momentum into the second half of the year. And inflation concerns are still there with us. Core inflation, underlying inflation pressures outside of energy and food remain quite elevated.
Going to quickly run through a few stocks that we see kind of pushing up high on the day. One thing I really want to know is NEO. NEO, I am now short bias on. Why is that? So if we zoom out, NEO coming into a really extremely overbought area. So from here, I'm looking at it. I mean, can be a day trade short, would be, very much in the money already, pulled back 60 cents from that level, but definitely a swing bias level as well. I'll be targeting around 11.25 as that first key level. Just wanted to point that out there so you can see what I'm paying attention to from trades. Getting in now could be a bit late, testing VWAP, but can still be a relatively good opportunity to jump in there. Yeah, I found myself personally feeling better about shorting, but I know being able to adapt to bulls or bears mean you walk that thin but more profitable line. So I'm always to everyone who makes sense. Yeah, for sure. Again, that's kind of how I look at it. I don't really have too much of a bias in stocks. I'll trade them long bias, I'll trade them short bias. What I tend to look at is the longer view of it. So, NEO, for example, down at these lows, we were actually trading it because it was extremely oversold. But in this case now I tend to flip to a more short bias view, because from how I look at stocks, this is extremely overbought and I expect a reversal. So definitely, I think most beneficial to not only be long, not only be short, but yeah, definitely playing both directions can be great. And especially if you're swing trading, you can reduce a lot of the overall market risk. Because, if you're only shorting and then the market's sort of super bullish, a lot more chance you're going to lose money. But if you're playing both directions, you kind of give more confidence to that. Also seeing AMC down now about 10% on the day at about 5.30. Just seeing if there's any other key movers. 3M still up at about 5%. UAL is actually down 4%. And we can really check Alaskan Airlines again. So Alaskan Airlines down near enough 11% on the day as well. Seems like it's holding up the move a bit better now, just coming into this VWAP and just holding. And again, spot coming into that key support I like to be paying attention to at 141.30.
The big change for China is we're seeing some downward revision in their inflation numbers. Both headline and core inflation are revised downward quite a bit, and that's one of the reasons why global inflation is heading down has been revised down in our new numbers is because of China's big downward revision. And so that is putting them in, their inflation numbers are close to 1% for the year. So that's fairly low. We expect it will pick up some into next year as consumption rebounds and as confidence returns. But probably the Chinese authorities will need to implement some measures to support the economy as well.
I'm surprised you haven't taken down growth forecasts since your April report, because most of Wall Street has been taking down growth forecasts as the data has continually disappointed. Why have you not?
Well, we were already a little bit lower than where other forecasts were. So in a sense, the rest of the forecasters have been aligning more with us than the other way around.
So you're still 5.2. You think they can meet their growth target, but they're going to have to stimulate to get there.
Also looking for some more entries on the NEO, just getting in some size just in case we fell off this VWAP. But again, going to obviously leave size leave some size to be able to get in if we do push higher. But I will find the options I want to enter on and then let you know what I'm entering on. I'm just going to filter out, see what has kind of the best opportunities.
On the property sector to help solve these unsold housing units and make sure that it doesn't weigh on confidence and activity going forward.
My final question is, I mean, it's a pretty rosy report, at least relative to expectations. So do you believe in the soft landing, or as I've been calling it lately, the immaculate disinflation, where central banks can pull it off? They can bring inflation all the way down without taking us into recession?
Well, it's not too rosy. Let's remember that 3% growth is nothing to brag home about. But it is true that
it's not
our
recessionary.
It's exactly. Our baseline doesn't have a recession. For instance, in the U.S., we see a slowdown of growth to 1% next year. It's fairly weak, and it's fairly vulnerable as well. So a few shocks might knock it off that path. So there's a narrow path to avoid a recession if you want in the U.S., but we still think it's doable.
Got it. Pierre-Olivier, it's great to have you here today. Thank you so much. Fresh off this new report from the IMF. As we head to break, our roadmap for you for the rest of the hour. More on the earnings movers of the morning, from Spotify to Verizon. We're breaking down the numbers and the takeaways.
As of right now, looking to enter on the 3-day expiration, so July 28th. Just looking at the $12 puts. Again, this is more to capture or utilize the quick pullback. But again, we will be looking at a longer term plan, probably maybe 38 or the 52 days out. So again, the September 1st or September 15 out expiries. And probably looking at some sort more, probably a covered stock, or yeah, it's easy to borrow. So either covered stock or vertical spread. I'll check out how much the covered stock are costing. But if it's not too bad, then we'll look to trade that. So it seems to be, we're looking to clear all that. Just check in. So yeah, if we short the $13 mark, which is actually above where we are now, we're paying a bit of money for that. Let me quickly sort through these. So if we go down to the $12 strike, we're risking $100 max risk, which isn't actually too bad. So that could be one thing to be paying attention to. So again, I would probably just flick through these, find out what I like the look of. And we can see what looks well. The 1250 is risking 130. To go out to 1115 is about an $80 risk. So seems like $12 could be the optimal strike as of right now. And if I go out to September 15th, that would be, let me have a quick look. So to go out to the $12 strike is $120 max risk. So that doesn't actually seem too bad. I do like the idea of that, because I think the chances are we're going to pull back below kind of that 11. What would we need to come back down to? We need to go down to about 1080 for worst case break even. Again, that means if on the day of expiration, if we do that before, obviously we'll be in the money a lot quicker, but it doesn't seem too crazy to have to pull back that much. Again, that's on the covered stock. If we look at some vertical spreads, then again, I'll just make sure we're looking at the right thing.
%30 of the S&P 500 reporting results this week. Got a number of tech names, the biggest, in fact, amongst them, at least some. Alphabet, Microsoft, out after the bell. Also, Meta results will come after the bell tomorrow, Sarah. AI certainly going to be very important, generative AI, when it comes to Alphabet, when it comes to Microsoft and Meta, all certainly going to be focused not just by the companies, but one would expect some questions from the analysts as well.
The thing is, the expectations are high already because these stocks have had such amazing run-ups so far this year. One quote stood out to me from Dan Ives of Wedbush. He said, and just this is an overall statement, and clearly these are the beneficiaries, the Alphabets and the Microsofts. For 2024, AI could comprise up to 8 to 10% of overall IT budgets versus 1% in 2023. So the ramp is happening.
The ramp's happening. Another question, of course, is at what expense? What have you cut back on? Is it just a pure 8% increase, or do you actually reallocate, which I think is the case?
The risk to rewards actually seem pretty decent, even on the vertical spreads. So what we can see is next Friday, so again, the 4th of August expirations, we can do a $12 to $13 vertical spread. So again, what this means is if you're below $12, you hit your max win. If you're above $13, you hit your max loss. But this is going to cost us around $60 as of right now. So a tiny bit less than a one-to-one risk to reward. But again, it gives it a week and a half to basically just fall below 12. And again, then you're in the money. This will be up about 10, 20% from there anyway. But again, we can hold that into expiration if we want. And see how it plays. So it could be something I look to actually play. They seem all right on the risk to reward standpoint.
Very oftentimes, you need to do nothing more than just take a look at NVIDIA's stock price. $1.13 trillion market value now.
Yep, sitting on the top of the triple Qs, just ahead of Microsoft and Apple today. As we head to break, check out the biggest gainers on the overall S&P 500 this morning. Again, the winners today, as David mentioned, are in information technology, the chips. The materials are also having a really good day. That sector is up 2%, and technology, utilities, energy, and communication services. Those are the winners. And a lot of it has to do with earnings. There's 3M up 5% off of earnings. We'll be right back.
And I can fight the fire when I'm dreaming. We could stare at the stars and start believing. I can make you love me, I'm trying this whole life, see.
As you've seen, a really nice bounce over on 3M again, hit as VWAP kind of came into our deviational level at around 119 or 109, sorry. Now we're starting to see that strength finally come in, so we might be able to break that daily high or intraday high of 110.37. Also seeing spot start to bounce around that 142 could be mainly down to, again, having that key level quite close. So we'll start seeing how we can react.
Leslie Picker with your CNBC News update. The Biden administration is pushing for better health care coverage for mental health treatment. The White House announced today new regulations that would require insurance companies to study whether customers have equal access to medical and mental health benefits and then make adjustments if they find they do not. The rules still need to go through a public comment period. The woman who claimed she was abducted when she stopped to help a wandering toddler in Alabama admitted the whole story was a lie. Carly Russell's attorney revealed the 25-year-old was not kidnapped when she vanished for 2 days earlier this month. He apologized on her behalf to the community and everyone who helped search for her. And the design for the Paris 2024 Olympics and Paralympics was...
Can't see quite a strong pullback on the S&P, but not seeing much movement on the bonds. And again, euro getting super weak. So again, dollar going to be strong.
The opening ceremony will be held next summer. The countdown is on. I'll send it back to you.
Leslie, thank you. CNBC is out with its latest Fed survey. This is the Fed kicks off a 2-day policy meeting. Steve Leisman joins us with the takeaways from that survey. Steve.
Hey, David, it's some interesting results. The probability of a recession next year dropping below 50%. That's for the first time in a year as respondents to the survey begin to think about the real chance of a soft landing for the U.S. economy. So how are stocks priced? If there is a soft landing, well, overpriced, according to this group. 7% say significantly so. 40% say somewhat. Just, 30% there believe that they are correctly priced, and 20% see them as underpriced. So this group's still believing that stocks are overpriced relative to a soft landing scenario, and that's why when we ask them where the S&P is going to end the year, not much change from where we are now. In fact, down just a bit before they get to about a 5% or a 4.6% increase next year, with the S&P going to 47.67. But there is somewhat less risk now in stocks. We look at the probability of a 10% increase or decrease to get a sense of how much risk is out there, and that risk is narrowed. You can see there it had been minus 15, the difference between the two, and now it's minus 8. So a little bit more sense that risks are better balanced. A big part of why recession probability has come down is because of the perception that there's less systemic risk in the financial system. 72% seeing it as above normal back in March. That's in the wake of the Silicon Valley Bank failure. That fell in June, and it's fallen again now below 50%. Still high, though. What might be holding back respondents from being more bullish on stocks is that even while risks have come down, they remain elevated. Recession risk down below 50%, but still double the average. And the financial risk still seen as above normal. Among those risks, as you guys know, how high does the Fed go? Does it create a recession? The survey says just one more hike, but most Fed officials see 2, and some see more than that. So we got to solve that problem, guys.
Steve, I wonder, I'm just going to throw two factors out there for consideration, and I wonder how the Fed views this. So we have a potential looming strike of 340,000 UPS employees by August 1st if they can't reach a deal. And I know that's temporary, and the Fed can say, you know, look, it's not a long-term inflation driver, but could be a short-term one. There's also the fact that the grain deal is blocked in Ukraine by Russia. Russia attacked a port, another sort of backdoor port in the Danube River. These are issues that could affect the...
Yes, I do. So again, I'll show you what I'm looking at on Leo and what I kind of think would happen. So as soon as you come into this 1270, we are becoming overbought. So to me, I would target 1130, and that would be where, you know, I'm moving stops to break even. I'm taking a good amount of profit, but I would definitely be holding some size in, just because if we do break this 1130, then our next target after that is going to be these first deviations, so 1040 and 986. 986 is where I'd be out completely. So, you know, 10 would be kind of the furthest out take profit I would have, with the first one being 1130.
Inflation coming down, with the possibility that there are going to be, as they say, bumps along the way when it comes to bringing inflation down. I think the trajectory's in the right way. It's going in the right direction, but it's not a straight line down, and the Fed is going to be cautious here. It's why I lean more, Sarah, towards thinking there's 2 hikes in the pipeline here rather than 1.
Me too, Steve. Thank you. And by the way, that's what they found out in the 70s too, and I know they've been studying that. Steve Leisman. Our next guest expects a quarter-point rate hike.
No problem, no problem. And again, seeing AMC, yeah, wasn't able to break that 538. So if we do continue down, again, waiting for the break of yesterday's low as well. And 3M is on the highs at 110.50, broke the previous high earlier today.
For us, at this point, in the last week or so, we've seen a little bit of a shift in momentum. Okay, very much so. First quarter earnings season and the first week or so of the second quarter earnings season, stocks did their own thing. They went up on earnings, they went down on earnings. Last week, when we saw some of the bigger cap tech names have adverse price reactions, you drag the rest of the index down. So for us, this is more like a rotational environment. We think there's a churn. Positively, speaking to the overall health of the market, when you look medium to long term, you've started seeing buying of financials again, in large part to what Steve alluded to, is that the financial crisis risks have subsided. We like that. We think there's more of that to come. We also think there's more buying to come in energy.
But as we just talked about, there's a risk of 2 more hikes, maybe more, maybe higher for longer. That's not what's priced in the market right now. So isn't that a downside risk?
Well, I think people are getting comfortable with the fact that rates are going to be elevated for longer, and if in fact that's not going to be the case, it'll be a consequence of a recession. Our concern here is that people might be just a little bit too sanguine about the probability of recession. We would tend to agree that a soft landing is basically priced in here, but we think the probabilities of
see a bit of buying pressure come in on the VWAP, 3M pulling back from those highs, and Spotify coming in to test that VWAP.
Kalanovic over at JP Morgan, a negative strategist, says the following. I just want to get your take. Delayed impact of aggressive interest rate hikes by global central banks, dwindling consumer savings, and a deeply troubling geopolitical backdrop are poised to spur fresh market declines and volatility. Where do you stand when you hear something like that?
So, you know, and again, this is not to downplay the risks that have accumulated over the last year, but the market has basically stood in and taken every one of those. And the fact of the matter is that when you think about it, a lot of the reason is the same reason we've been obsessing over inflation for the last year and a half, 2 years, which, by the way, we think is likely coming in quicker than the market perceives, with those bumps in the road. But the fact is that you created so much money to fight the pandemic in 2020 and 2021, and we were still buying bonds in 2022, that has softened the blow of all of these events. It hasn't necessarily preempted the business cycle. The business cycle is the business cycle. It's just elongated and put the risks probably tilted more towards 2024.
What are you comfortable with when it comes to evaluation? Given we're in earnings season, they're fine, but I mean, multiples are going up, as you know, that's where we are right now, Julian. So where do you start to say enough?
So there's no question about it. And a lot of this has been about, the fact that the Fed essentially backstopped the deposit system in March.
Just seen a price target increase on Facebook Meta, to $350 from $280. It is maintaining a buy rating.
These things are expensive. The long-term future is bright. And if you're a long-term investor, you just sort of sit here and you appreciate the fact that you're getting north of 5% on your cash. That's the long-term picture. If you're worried, if you're overinvested, you trim a little bit, maybe some option hedges, very, very inexpensive.
I just always go back to the consumer. And, you know, we got news at the top of the hour, Julian, that showed that there was this big surge in consumer confidence from the Conference Board, and it follows what we've seen from the University of Michigan. And it's interesting to see an acceleration at this point, even if the business cycle is delayed by COVID factors. How do you explain what's happening right now?
And actually, in a lot of ways, Sarah, it doesn't make...
French antitrust arms files statement of objection against Apple.
Psychology was so affected by inflation that these sentiment numbers were depressed. That's starting to end, okay? The next question is the Fed going to be successful in creating a loosening of the job market? You will continue spending.
Do they need to be to get inflation all the way down?
I think they do. We're going to find out on Friday that core PCE is going to come in north of 4%. 4% is not the new 2%, according to the Fed.
You seem to draw a direct correlation, though, between the move up in the NASDAQ and, you know, the Fed's ability to fight the mini banking crisis we had. in March. What about
Also, just to update on the fear and greed index. So the crypto fear and greed index is at 50 out of 100, so neutral. And fear and greed index for the stock market is 81 out of 100, so extreme greed.
Then you had that huge rally in January, which told you, sort of gave you hints of what was to coming. And then essentially AI, which we are firm believers in terms of the ability, particularly given the fact that global population, China in particular, is declining or will decline later this century. It's going to be transformative, but productivity-wise. But the question is when you think about the stocks, have they run ahead? What we saw last week is they may have run ahead. We're going to find out more this afternoon.
Julian, thank you. Good
you.
summary of everything happening. Julian Emmanuel from Evercore ISI.
Well, GM and Spotify in the red this after results of both names are out. We talked to Mary Barra earlier. Spotify, it's, sort of future guidance in terms of sub growth that seems to be pressuring that stock, amongst other things, because they did actually have quite strong subscription additions. Squawk in the Streets, right back.
Also, guys, any stocks you're currently watching? Again, my main focus for today is really just going to be Neo, Spotify, 3M, and maybe AMC if we can break the lows. But they're at the 4 I've got on watch. So if you guys are watching anything else, let me know and we can pull it up, see what it's looking like. Also, just to update on that leading gap, or what was the leading gap on the day, the was it ELBM again came back, or we hit our second and third deviation. We retested it here, failed, selling off. Now, to be honest, we're probably going to give back most of this gain, I would expect. Potentially even see that gap fill today. So just wanted to update on that. We now have AURC as the leading gap. So let me quickly grab key levels on that. And this one has actually gone extremely overboard. From a deviational standpoint, went from, overbought from $12 to $13, and we've skyrocketed straight past that. So I don't even know what the news is on that. I'm going to have to quickly look a bit into that, because that seems like a crazy move if it's not some sort of split or something like that. Which doesn't make all that much sense. Some reason I can't really see anything on the news of why this AURC is moving. The last news statement I have from them is for March, so I can't really see why they're moving. Considering it's an acquisition corp, maybe there's some sort of acquisition or merger being confirmed, or rumors, speculation of it. But yeah, I mean, at least across Thinkorswim, not showing any reason for the news, just showing that they keep having circuit breakers. So I'm just going to stay away from that completely, because if I can't see why it's being extremely overbought, I don't think they had options. Yeah, they have no options and not available to borrow. So really, unless you're trading the upside, it's not really tradable. And again, if you guys are watching anything, let us know and we can pull it up on the charts, see what it's looking like.
And as well, investments it's making in what will be fewer new products. The company is also in the midst of negotiating new labor agreements with the UAW, hoping, of course, to avoid a strike that could take place later this year. Here's what CEO Mary Barra had to say about that.
Well, we're very proud of the, the compensation package that we have for our manufacturing employees. We think it is very strong. There's always aspects of it that we can look to improve, and again, while we're
and again, don't forget to use a vote in the comment section on whether you think the market's going to end green or red today.
The facts, but again, I think we can get to an agreement without a strike.
Of course, strike UAW, the one that's more, and I know you've been thinking about a lot, Sarah, is the Teamsters with UPS, which is what, an August 1st deadline?
August 1st deadline, 340,000 employees. And Frank Collins has been doing a lot of work on that. Could have a big hit on the economy, at least the longer it goes on.
They do seem to be close, though, we should point out,
They're
right?
talking still,
Yeah.
which is a good sign.
That's UPS
always.
we're talking about.
Seeing some news for Boeing, US Airlines to support NASA Boeing Sustainable Flight Demonstrator Project. NASA and Boeing unveil X668 livery, so some sort of new plane of some sorts. It seems it's slated for 2028 and 2029 out of the NASA's Armstrong Flight Research Center at Edwards Air Force Base.
Too bad.
Yeah, the numbers look pretty good. They did raise guidance. They did hit their 50,000 EV unit target for the first half of the year. And
not really seeing a massive reaction off this news. Again, it only dropped about 4 minutes ago. So it's basically just stayed on the anchored VWAP since that release.
But to your point, maybe some disappointment in terms of where the guidance ended up on EBIT. I'm not sure. Jim had some reasons as well that perhaps we're seeing a bit of a turnaround in the stock.
Yeah, down 3.3%. Overall market hanging in there. The Dow has joined the S&P and the NASDAQ today in positive territory. We're seeing fractional gains, but still a little bit higher, and it's driven by materials and technology.
Speaking of materials, let's get a look at that. Dom Chu's back at HQ for us to do that. Dom.
All right, so David, Sarah, the S&P mixed from that sector perspective, but as you point out, that materials trade, as you can see behind me, is a real standout to the upside amongst the 11 S&P sectors. Packaging Corp of America is among the leaders there, following a big earnings beat of its own. The company also expects higher volumes in its packaging and paper segments in the current quarter. That is helping, by the way, other paper and packaging giants like WestRock, also International Paper as well. And then let's throw in some paint. Sherwin-Williams is also among the sector's leaders after hiking its full-year outlook, as you can see behind me there, thanks in part to strong paint sales during the previous quarter. And by the way, Sherwin-Williams and Packaging Corp are both hitting fresh 52-week highs in trading today. So that materials trade, David and Sarah, as you point out, one of the real drivers to the upside in today's session. I'll send things back downtown to you folks.
John, thank you. It does feel like a lot of companies are raising guidance, which is sort of surprising in this environment. Sherwin-Williams, as Don pointed out, Kimberly-Clark, Unilever, Raytheon, we mentioned earlier, GM. Interesting time.
Right.
They've
Although
had strong
GM's
first
down,
halves.
Raytheon is obviously down a lot, not because of
Other issues.
not because of the fundamentals, but it's a big issue with its Pratt & Whitney engines.
Right. Still to come, shares of mining company Cleveland-Cliffs are taking a tumble as well over the last 6 months. Could results be the key to a turnaround? We're going to discuss with their CEO, talk about the steel industry in just a few minutes. That kicks off at 11 a.m. Don't go anywhere.
Starting to see a bit more of a reaction actually on Boeing now. Seems like we're setting off actually off this news. That might be because, again, the numbers for 2028 and 2029, so still quite a few years off. I'm seeing quite a strong pullback as well on the SPY and the S&P futures. Both coming, well, SPY's just hit its VWAP. The futures are about to hit its VWAP. Not seeing much reaction on the 2-year bonds. And then looking over at the euro, euro's getting a bit of a strong bounce. So again, that's going to be some weakness in the dollar.
could stare at the stars and start believing. I'm never gonna survive unless I've got you near me now. We'll try so hard, and I can fight the fire when I'm dreaming. We can stare at the stars and start believing. Oh.
User growth. Second quarter net additions in the company's history. Spotify reported 551 million monthly active users for the quarter. That's up 27% year over year and far ahead of the 529 million estimated and also ahead of its own forecasts. The company also reported 220 million paid subscribers. That's up 17% from a year ago. Now, all of this comes after yesterday, the company announced plans to increase its premium subscription price by as much as 20%. CEO Daniel Ek saying on the call this morning that the price hikes won't impact revenue per user in the third quarter very much, but they are expecting a more meaningful impact in the fourth quarter. But Bernstein's sales desk out with a note saying that the company's guidance for the addition of 4 million premium subscribers seems, quote, skimpy, writing, I'm guessing they are worried about the negative impact the recently announced price increases will have on churn, even though price increases don't start until September. But on the call, the company stressed the upside potential around a number of things, including AI, saying AI will benefit both from a consumer and an advertising perspective. They talked about their generative AI DJ product, saying it is driving strong consumer interaction. David?
Julia, thank you. I want to get back to Raytheon. Of course, it's been a feature this morning. The shares down sharply, though, off the lows. Had been down as much as 16%. This after the company disclosed an issue with powder metal for its Pratt & Whitney engines. CEO Greg Hayes joined us at the top of the hour to tell us exactly what is going on here.
We've inspected about 3,000 discs. These are turbine discs. Over the last 3 years, we've found a very, very small fallout rate. But based upon what we have seen recently, there has been a concern that we need to inspect the fleet more rapidly.
You went on to explain, Sarah, sort of they've seen some deterioration that they're concerned about, and so they're moving, again, more rapidly, which means 200 PW1100 engines will be removed for enhanced inspection, and then they go on from there. Another 1,000 could take airplanes out of service for, I think he said, as much as 60 days in some cases.
So that's why we see the reaction on the airlines, and Jim expects those numbers to be lowered on the Airbus, on those Airbus engines. Meanwhile, GE having a good quarter, in part on that 37% rise for aerospace orders.
Yes,
in the business
aerospace and on land wind as well, a beneficiary there. But yeah, GE shares up sharply. Squawk on the Street is back right after this.
Hey everyone, I think we're going to end the stream now. Again, 3M's at the highs. Everything else kind of just staying flat. We're not seeing... oh, got got my thing flying. Nothing's just really moving. Sort of everything's a bit slow. So I think we'll leave it to tomorrow. Again, still looking at that swing on NEO. I'll just pull the chart back up now. Again, as it retested that VWAP, we got those 2 contracts. We got the $12 puts that expire Friday. If we can push up higher again, maybe look to enter into some more vertical spreads or covered stock will probably be the 2 routes I look to trade it. But again, we'll look into that more tomorrow. We've just hit 11 AM, so yeah, we will end the stream. Hope you enjoyed. Hope to see you tomorrow. And that's it. Peace.